by the time we go through all that, they give up, right?
Yeah, it's just one thing after another. And, what they say at real estate, like the deal is not dead until it, because there's always different things to, workarounds and that kind of thing. But
The Abundant Wallet.
all right. Well, hey, Terrence, thanks for hopping on the Abundant Wallet podcast. Definitely glad to have you here, and looking forward to your insights and a lot of your commentary.
Thank you for having me, Larry. I really appreciate it.
Yeah. Thanks so much. Yeah. So I know you're a real estate investor. A lot of things, or a lot of questions that I ask is centered around that. But how did you actually get started in real estate investing?
Okay. Well, let's take a long rewind back. So the last job I had was back in 2002, and I knew I wanted to do something different. So it wasn't real estate right away, but the company I worked for, I was doing home delivery. They ended up outsourcing it to another company. So I found out who that company is, and I started a trucking company. And so from there, for maybe 3-4 years, I did that. And then it's like, okay, I got tired of it because I own a job. Got to be at the dock at 5 a.m. and so on and so on. And so I used to come home like really late at night. And then back then they used to have those infomercials on about real estate. So I might be getting home 11, 12 o'clock at night, can't sleep, and those things will be just on. And but they really intrigued me. So I just finally took a step out, and I went to like one of these seminars that they may have had back then. And I officially got into the game by getting my first property in 2004.
Okay.
So that's how I started. And even on that, this is how green I was. So I had just bought my personal home, with me and my wife. And when I bought my home, the realtor, who was an investor himself, because you got to remember, I didn't really know too much, right? And then I was telling him about the seminar I went to, and he was like, "Well, go find a house." And then I went out, I found a house with his help, and then he asked me a strange question. I thought it was strange. He was like, "You want me to buy it for you?" I'm like, "Wait a minute, what?" I'll buy it. And well, I didn't know the meaning of hard money and all that type of stuff back then. So he ended up purchasing the house for me, and from there I was just off to the races.
Wow, that's incredible. So this guy was kind of like a mentor, just because he knew maybe more than you, and you were willing to follow him, and that kind of set you up. I would imagine that even after that first purchase, you were probably picking his brain or other mentors that you can get around to kind of educate yourself on what else is out there.
Yeah, pretty much, because like once I got that property, this is when I started learning a little bit about myself. And so here's the funny thing. So I used to be a bodybuilder, right? So back then, I was a lot younger, and
Okay.
I remember going to Home Depot, buying the tool belt, buying all these tools and stuff like that, posing in the mirror with the tool belt, and I remember buying the sledgehammer. And so I remember going into the property. I remember taking the sledgehammer through the wall. Why I was doing it, I don't know. But
wow.
But I bought one of those orange Home Depot books because I figured, like, you know what, I'm going to do all this stuff myself. I'm going to learn it. And I was sitting there trying to solder a pipe. Somebody told me to take bread and do this and do that, and it just wasn't working out for me. So then a buddy of mine, he told me, he was like, "Hey, you need to call Daryl. Daryl knows how to do this." So I got on the phone and I called Daryl. And then from there was something else going on, like with the electric. "Hey, you need to call so-and-so." Okay, I got on the phone and called so-and-so.
Yeah.
And then that's when I figured what I was good at. I was really good at calling people to go in and do what needed to be done to these properties so I could get them up and running. And so basically once I figured that piece out, but to this day I don't have a callus on my hand. 'Cause I can't even hang drywall. But I was, I knew how to tell people what I wanted done. And from there, I think I did what a real estate investor's biggest mistake was, because I was going to sell the property. But because all the work that went into it, I fell in love with the product.
Yeah.
But the biggest change was because I had to pay Chuck back, the lender. I had to pay him back. So I refinanced the property.
Okay.
And then once I refinanced it, I walked away with a check for a little over $26,000. And
Wow.
that's when it really got real to me.
Wow. Yeah. That's something tangible that, like, okay, there's a lot of promise in this. Like, I can do this. You obviously have the management mindset and the coordination to delegate, like, to your subs and stuff like that. So, I mean, it sounded like you had ownership and like entrepreneurship mentality already. So you just had to put it to use. That's awesome.
Right. It all ended up clicking. And then from there, like with Chuck, he was a real estate agent. So he knew that side of the business. But at that point, I also was looking for other mentorship, and that's when I joined Fortune Builders. And so once I joined Fortune Builders, and they taught me about wholesaling real estate, rehabbing real estate more efficiently and things like that. And I remember saying to Chuck, "Hey, look, I'm gonna wholesale these real estate deals," and he was like, "You can't do that, typical agent." I'll never forget the first one I did. I made an extra $5,000, and it blew his mind. And so what I ended up doing from there in 2005, I went and got my real estate license.
Okay.
Because once I got my license, it gave me access to the MLS. Now it was for the pickings. All the rules that are in place now wasn't in place back then. Because this is before '08. So a foreclosure, I could go in, I could bid on it. And before anybody else, and things like that. So basically I was just flipping house after house after house back then.
Okay. So your strategy was kind of what you knew worked, and it was single family houses.
Yeah.
You were rehabbing them and you were flipping them.
Yes. Yeah. And the ones I didn't really like, I was just pretty much wholesaling. Yeah.
Nice. Okay. No, that sounds like a great start to a career. That's awesome. Was there anything that, you had maybe a tougher lesson or maybe a setback that, even though it was like a challenge and you weren't used to it, it didn't matter because you see the end game and the bigger game, but it's just one to put in your hat in case it crops up later?
Yeah, I would say one of the biggest lessons that I ended up learning, because once I knew how to get money to be able to do the deals, and using private lenders, and because even in the business that I'm in now, that's not what I did back then. I was blessed. I could pick up the phone and I could say, I need 100,000, I need 200,000, and it would be there, right? And but one of the things I did do is I literally quit my trucking business and jumped in full time. Right. And so that was probably one of the biggest mistakes I made, because okay, I have all this money, sitting in the bank and things like that, but this money is for the rehabs.
Right.
And because I now didn't have any income, so now I'm using a little bit to, survive, because everything isn't selling as fast as I want to, and so on and so on. And so that's one of the biggest mistakes that I would tell anybody. Don't quit your day job. Get your business up and really truly running first before you make that decision. And so that probably was the biggest learning lesson that I got. And that kind of took me through. Took me through a period, because it got to the point where I'm doing like 7, 8 properties at a time. Fortune Builders was a good teacher. Because everything is about systems. Every buyer, they didn't know they was getting the exact same bathroom in each house. Same tile, same carpet. As long as it looked up, they were. People are happy.
Yeah, and that makes the maintenance on your side pretty easy, because you're doing it off of a spec. You're not changing it up because a customer wants something. Like here, right. You're like, here's what we have. So
exactly, no
nice.
customization.
Nice. No, that's great. That is awesome. So fast forward to today, as far as like investing, what does your strategy look like today?
Well, here's the thing. I'm not really a real estate investor now. You know what I
Okay.
mean? Yeah, I mean, I still have what I have. I mean, I switched up. Like, I have a commercial building. Things like that. Like, I don't really deal with the things that I dealt with back then.
Okay.
So, because here's the transition. Once, like I say, I went through Fortune Builders, and then because of my success through them, I ended up becoming a mastery coach. Right. So I'm coaching people all around the country how to get their real estate businesses up and running, right? And so, and even upstairs, like I have a training room where I would do trainings here, teaching people how to wholesale real estate and, flip houses. And one of the things that kind of, how can I say, made me pivot a little bit is I have other tenants in the building. And one of the tenants came in one day, and he has a home health care company.
Oh,
And
okay.
he was angry because about, the contractors running away with the money of stuff that was supposed to be done. And when he gave me a deeper dive into what happened, they were doing home modifications with people, with disabilities, right?
Yeah.
And so now understand, I'm in the Pittsburgh market, okay? So on a real estate flip, I might be making $20,000, $30,000. It wasn't nothing like, a New York flip or a California flip.
Yes.
So it was an average, maybe 30, 40,000, but the whole idea was doing volume. So when he had told me about what he was doing, a light bulb pretty much went off in my head. And I literally pivoted out of flipping houses because one of the things that I knew how to do is control contractors. They were doing these bathrooms. I had no idea what anything retail costs because I don't do retail. So
Right.
I remember having 3 different contractors come to my house stating what needed to be done to his properties, and they were giving me prices like 20,000, 25,000, so on and so on. And so from there, that's when I pivoted because I just said, okay. I'll do them for 22.5. They're paid by the state or whatever.
Yeah.
So back then, it only took me maybe 5 days to do a bathroom. Right? We're talking
okay.
one room.
Yeah.
I paid my contractors like $3,000. Somewhere around there. Materials might have been $5,000. Basically, I ended up walking away with 15,000.
And that's just for part of it. So
and
that's
that's it. Right.
Wow,
That's just
wow.
for doing one room. And I could float out a whole bunch of these. So
definitely.
that was my pivot. So I kind of got out of flipping houses, and I was just doing that. But then once the state changed the rules, I probably went almost a whole year without work. Just kind of hoping I would get some. And then at that point, I had to figure things out because I got a lot of bills. I got no money's really coming in, and so I had to figure things out. Then I'm like, okay, I don't want to go back into teaching, real estate investors. But
Yeah.
then I had another mentor. I don't know if you know who the late Bob Proctor was.
Yes, I love Bob Proctor. Yeah.
Oh, okay, all right. So he was
Yes.
my mentor.
Wow.
And so one of the things that he said, he told me to take a deeper dive into myself, basically, right? I love teaching people, but I didn't want to do it anymore, so I had to ask myself why. And so once I figured that out, it was like, okay, some people are having success and some people weren't. And I had to think on it. But they're all getting the same information. But then that's when it hit me. Those that have access to money, they soared. Those that didn't, they had to, figure out, learn how to wholesale real estate, try to save that money, to be able to make enough to flip. And so by the time we go through all that, they give up, right?
Yeah, it's just one thing after another. And, what they say at real estate, like the deal is not dead until it, because there's always different things to, workarounds and that kind of thing. But, people who learn some of this stuff early on, it's like a totally different animal. Like some people aren't willing to just keep at it because this will, I don't know, there's just so much wealth building in real estate. But yeah.
There really is. And so from there, that's when I made another pivot, because once I figured out, because Bob Proctor, he had told me a story about acres of diamonds, and once he told me that story,
Okay.
and that's when I took the deep dive into myself, right? And I'm like, okay, basically, okay, how can I help investors? And it was more or less, it was about the money, right? And so that's where eFunder Capital came into existence.
Okay.
And here's the thing, I knew nothing about the lending side because, like I said, I had never used a bank, credit union. I never have. I was always blessed just to pick up the phone. Hey, Larry, I got a great deal. I need $250,000. I'm going to pay you, 8%, 12% on your money. Well, usually my spiel was, I'll pay you 10% on your money, but if you wait until the project's done, and once it sells, I'll give you 12% on your money.
Yeah.
So that used to always be my spill.
Yeah, that's cool.
But the thing is, my investors, they're not going to give money to somebody else. They'll give it to me because they trust me, but they won't give it to somebody else.
Exactly. Once you have that track record,
right,
you're theirs for life. Yeah.
You are. And I tell anybody, like, when they learn this business, start getting up in front of a room and start teaching people. You know what I mean? And and I think about what you do, right? Because think about like what you actually have is so powerful, and I don't think a lot of people know about it because. When it comes to that infinite banking and like when they need those down payments, see, like in my business, I need to see liquidity. I need to see, certain things from a borrower, right? And for a borrower, like they got this insurance built up. I mean, it's done all the time, right? I mean, they could take their money out. That's their down payment. They're still making money, in the policy as if it was still there.
It's incredible because, talking about some of those strategies, it's like you don't follow the same process when you need money from a bank or a lender. Like, you don't have to submit docs, you don't have to submit, your W-2s and all that. This is yours. You can take it out whenever you want, and you can pay it back whenever you want. There's no terms, or if you didn't want to pay it back, it just comes off the death benefit. And it's like people have been doing this for over 200 years, and that was the real wealth builder in those times because the stock market, the IRS, and the IRA and the central banks didn't really come into play until 1913. So people were still doing like infinite banking, so to speak. They didn't know it was called that, but but it's really incredible. But like, I also see what you did from a real estate perspective, that you were already kind of in the lending business. You just didn't have, it just wasn't branded. So if you're calling people up, say, I need this money, not really lending per se, but where to get money. And, once you kind of built a name for yourself, like, I feel like you're going to have customers for life with eFunder Capital.
Right. And see, the thing is where, like, I still talk to clients before they take, a plunge on, because basically I'm a capital strategist, all right? That's, that's my brand. I help people figure out how to get a deal funded, how to do, get this deal done. And it may be a thing where, let's just say they do have that insurance, right? And they do have that infinite banking. Yep. And so what I tell them, like, let's just say, let's make the numbers even. Let's say they have $100,000 in there that they got access to, right? Mm-hmm. So you can take that $100,000, go buy a property and stuff like that. Yeah, you'll still be making money on this side as if it was still there, right? But on the same token, you could come to somebody like me. And so now, let's just say it was $100,000 properties that you was buying. Now you could go buy 5 $100,000 properties, just use $20,000 down payments.
Yeah, exactly.
It's the same concept, but you just grew your real estate portfolio by 5 properties. You know what I mean? Yeah. So there's so many meaningful strategies that can be done when it comes to, the infinite banking. And, my company is open to those that they want to, build portfolios that way, I mean, I think it's a great strategy.
Yeah, I mean, that is so well said. I feel like even if you have experience, like, I've been doing like, I still have my W-2 and I'm a data engineer, but like, I'll never say that I know everything. So like, even if people are doing real estate for 25 years, there's so many different ways to skin a cat, and you're a strategist. Like, why not go to someone like you? Because when they walk out, if they multiply their properties by 5 with having a lower down payment and the connections that you have, like, to me, that's a no-brainer.
Amen.
Yeah. No, yeah, thanks for explaining the transition there. That is really cool. So I guess as of right now, I know because you were kind of a foreman, so to speak, on getting things done in your own properties. And I know you own commercial buildings now. Are you more of an LP, or what kind of investing do you do currently?
Like I said, I'm not really on the investing side now. I mean,
Okay.
unless it's something like really great.
Yeah.
Because just like when I pivoted, into the bathrooms when I was flipping houses, right? When I figured out, okay, I can really help people on the money side, right? Because I am a direct lender, right?
Mm-hmm.
So, but I did not know the business. Now, granted, I ended up buying a book when I was figuring this out, right? I ended up buying a book. This is on, and I literally read it 3 times, right?
Okay.
Then, so September of 2019, that's when I formed eFunder Capital.
Okay.
And so I had to figure this business out, and I literally didn't close my first deal until December of 2019, and I made a whole $1,112. I don't know if you can see this, but this is actually it.
Oh, nice! Your first check. That's awesome.
Yeah, I actually got it on my desk.
Yeah, I love that.
So I made $2,112 in that December. But here's the thing about this business, and this is the reason I really didn't go back into flipping and anything else. That January, I made over $13,000. In that February 2020, I made over 18,000. That April, I did over 20,000. That May, I had literally 50,000 in the pipeline, and I'm up here like, okay, I love this business. This is unstoppable. Like, thank you, God, because, I've never made money this fast and this much, and, without, that deep dive into real estate, right?
Yeah.
A flipping or something, right? And it's like, okay, because I could be doing 3-4 flips for somebody else. And, on the lending side. And then I'm like, okay, nothing can stop me but a worldwide the pandemic. So once that pandemic hit, 50,000 I had in the pipeline, every last one of them dropped dead. Wow. Because I learned something about this business that I did not know as a beginner. And so one of the things, I had to learn who the real lenders were. So, and what I mean by that, right now, me and you can go out and we could get us $1 million line of credit, right? And so from there, we could go ahead and just start lending money, or lending money from your insurance policy, whatever, right?
Yeah.
But the problem is when you lend the money out, especially on the warehouse line of credit, those monies have to be paid back. So what you're doing is once you do the mortgage, you're packaging it up. So you're making points on the front end, but then you're going to sell that thing to the mortgage to the secondary market to replenish your line of credit, right? So you can just keep lending over and over. And so once the secondary market shut down, and so all this money was out there, all these mortgages, and there was nobody buying on the secondary market, everybody was going bankrupt. That's why all these lenders, they just start going under. And so that's what really taught me, okay, who are the true lenders out here? Who are the true balance sheet type people that's out here, right? Now, private people in your world, you know what I mean? It's golden because that is their money, you know what I mean? As long as the property is being, taken care of and sold on the other side. But it just taught me who the true lenders were in the world, and I really truly built my company around those type of people. Whereas now, say I got probably 70 credit unions up under my belt. Like I said, do direct lending, correspondent lending, just to be able to help people. But that was the pivot into this business to where I'm at today.
Now I kind of see, because it's not taking anything away from the lending business, but you're not doing all the physical and the coordination. Like, you're making better margins than you were flipping, and you're doing less work to get there. So it's a no-brainer. It's your business, it's your baby, and it's making you some great margins. And at the same time, you're helping others make great money and business decisions on maybe what property to buy and how to strategize of maybe what might be called an arbitrage, just like a regular business, where if you see an opportunity to buy a property that is a steal, you want to know after you rehab it, after the investor rehabs it, it's going to make more money than they actually put into it. So
exactly, and that's really the nature of my business now as a capital strategist. I just want to help people grow their businesses, and so like I said, when I meet with them, I see what they have. I just literally 2 days ago, I closed on a commercial building. For an example, the guy is, let's call it $1 million building. I had sold him another building a few years prior. He wanted to get this other building to expand his business. And my question to him was, how would you like to be able to get into this deal with no money out of your pocket, right? Yeah. And so once I knew the other assets that he had, and I remembered that I had sold him that building I financed that building for him a few years back. So all we did was just basically refinance that building that he had already fixed up. We used that equity as the down payment on the new building.
Nice.
So, but that's basically what my job is, to be able to help others build out their portfolio. I make money by helping other people make money.
Yeah.
So that's where
it's just a byproduct. Yeah, for sure. That's awesome that what you're doing. What type of customers do you typically take on, or that you might be looking for?
I pretty much get across the board. I definitely love working with seasoned investors because they pretty much know what they're doing. It's just like, when we sit and we talk, I may be able to give them some insights that they didn't necessarily think about. But I'm okay with the newbie investor also.
Okay.
Because sometimes, they need that, they need their hand held, and, not that I'm going out coaching them or anything. But, I can definitely walk them through the financing, and I don't mind financing like a first time flipper or the DSCR type of situation with a rental or something.
Yeah.
Yeah, because my goal is just really to be able to help as many people as I can to be able to grow their businesses.
Yeah. That's awesome. No, that's great. What do you think? Where do you feel like capital is either maybe limiting people or might be slowing them down?
Well, what I see, there's a lot of people with a lot of aspirations of do bigger things, but sometimes if their credit isn't there, that holds them back. I do have a product where I don't necessarily care about credit.
Okay.
And and that you're not going to find that in too many places. But I'm only giving up 50% LTV, and and the properties need to be rent ready. They could be vacant, but they need to be rent ready. Yeah. Or if it's a commercial type property, that business needs to be up and running. Like, it's not for a rehab or anything like that. I'll go up to $5 million on, each property. So
okay.
Credit is usually the hurdle when people want to get into the into the business, especially on the fix and flip side, because credit is going to be, at least with my company, the credit is going to be, because I do care about credit, because pricing goes by the tiers and things like that. I think another thing that holds people back is they may get deal on some like really small type properties, like these cheap properties and everything.
Yeah.
And we don't necessarily fund cheap properties. You can't come to me with a $20,000 property, or you want to, so we have certain thresholds, and but even with those people, what I try to tell them is like, okay, let's just say you got $30,000 and that's all you working with, right?
Yeah.
Okay, use that $30,000 as a down payment on something bigger. I'll fund the rest of it, and then when you make money on the other side, use that profit to go buy those little tiny properties. You know what I mean? That you want to keep as a rental or something.
No, I like that. You're not doing any bridge loans, but you're kind of leveling them up, because like you're basically like don't think so small. Like go after the big guys, right? That's awesome.
Exactly. If you got the money there, take the most advantage of it.
Yeah, no, I love that. What do you think maybe some of the differences are if someone is either buying a business or buying some assets of maybe eFunder capital versus like an SBA loan?
Well, here at eFunder, we actually do SBA. Well, let's just say it's outsourced. You know what I mean?
Okay.
It's a whole lot of paperwork, so I got a whole other team that deals with that.
Gotcha.
But SBA is a great product. So for someone that's a business owner and they're looking to either buy the business, because I believe. Because I believe we could fund it to 100% of. So I always get the 504 and the 7A mixed up on which was which does which.
Okay.
But I think it's a great opportunity for people. The process is tedious, of course, because I literally had some business owners. Whereas, look, I'm sick and tired of waiting all this. Just try to say that little 10% down, 10% instead of 20%. Like, look, I'll just pay the 20%. It's my equity. So,
yeah.
But I do think SBA is a great product.
That's awesome. Yeah, that's cool. Let's see. So do you see any of the business owners that maybe, I know you mentioned earlier on where, maybe they're emotional about it. Maybe they're new. Maybe they've been doing it for years. But like, what do you see investors maybe losing the most money, like without even realizing it? Could be up front or could be on the backside.
You know what? Where I see the most, there's a couple places. There's the investors where, okay, it's almost wintertime. Let me just throw some bodies in my places. And it's never a good result, right?
Yeah.
So the properties that I still deal with now, I can say I probably haven't had to do any type of, an eviction in God knows how many years, right?
That's good.
And the main reason is because I take the time to run credit, do a background check, read the report, see what's on there. Somebody could have a hard time, for a minute, but if you actually read their report, you can see, like, okay, their score might be down, but it was right here. It's some kind of rough patch. Explain to me what happened here. Because now everything else is paid, you know what I mean? But maybe it was a medical issue or something like that. They were going through something. But just taking the time to look at that, because on the same token, I look at a report and then, okay, I see 4 charge-offs for 4 different cell phones. Okay. Well, you're not paying them, you ain't paying me. You see what I'm saying?
Exactly, yes.
So instead of that person, because I think a lot of people, somebody come up and say, hey, here's $5,000 in cash. I'll pay for the whole, whatever, a couple months, up front or whatever. And they just take the money and don't do their due diligence. They lose, right?
Yeah, that looks good up front, but it's just like, okay, if you're in a 12-month lease, like right. I need to validate your income.
Exactly. And then and I think the other thing is I see people that they don't raise their rents because they're scared of vacancy. Vacancy is part of business. Go and update your properties. I mean, the average rents is like, between, let's say a 2-bedroom might be $1,500 a month, and it's like you're still only getting $600. Like, wait a minute, what is that? You can't even refinance off of that because the debt service ratio, coverage ratio isn't there.
Right.
With these leases. So I think that's what hurts people. Also, I think the other thing is if you don't have a significant amount of liquidity, and you go to, let's say you go buy your first investment property, because I really believe some people, they need to go out and maybe flip some houses and stuff like that first, make some money.
Yeah.
Because if you sticking your last little bit as a down payment and on a single family home, and you're only getting X amount of rents coming in, so that money's coming back slow, and then all of a sudden the furnace breaks. You need a new roof, something happens.
Yeah.
You just got wiped out.
Yeah, no CapEx fund. Yeah, that's
right.
That's
Exactly.
not good. Yeah.
Exactly. So I think the biggest thing, Larry, just like I went through Fortune Builder, and don't get me wrong, there's other real estate companies out there. I think people just really, truly need to be educated before they pull the trigger.
Yeah. Like, I feel like, I mean, you probably joined one of the best people of, law of attraction in the world, Bob Proctor, but like, there's masterminds all out there, and it's just like, you need to put some skin in the game. So, because you want to invest in yourself more than you want to invest in anything else. And once you do that, you're going to have the reps, you're going to have the knowledge, the education to have your due diligence. You're not going to be, I'm not saying things aren't going to happen, but, you're going to be equipped with that knowledge, so you know what to do right off the gate. So, yeah.
Exactly. Look, I'm the one, I don't mind paying $20,000, $30,000 for, to learn something that I really, truly know that's going to benefit me, help me, you know what I mean? Because I know stuff isn't cheap, you know what I mean? But take the time. Everybody I know can't really afford something like that. Get this little thing called ChatGPT. Ask it some questions, you know what I mean?
Right.
Let that thing help you, but definitely educate. Because even my company, it's like, I really didn't have no mentors when I started the actual business of eFunder. I bought a book. That book cost me $22. But like I said, I read it 3 times, and now, I mean, I can't even tell you how much I've made over the last, you know what I mean? Like, I've made so much off of a book, but basically what I'm saying is I educated myself first. So once I educated myself, now I could put things into action.
Yeah. And some people think they do, and then they learn. It's just like, it's kind of backwards. Like, you want to put more money into yourself than, something else, because that, it might fall flat. But,
right. Because, I mean, think about it. You can learn from your mistakes. It's going to be crazy costly. Or you can go learn from somebody that made the mistakes, right?
Exactly.
So, I mean, and it's a good segue, because think about it. Think about what you do. Like, people need access to money. People need to, think of what infinite banking is. And here's the main reason I'm familiar with it. Because I actually had, at one time, there was a tenant that I had that's what he did. And so that's why I got familiar with it. And so what you do is extremely powerful. And it's like, people need to know about it. And if they're a real estate investor listening to this, they need to, like, hey, Larry, you need to tell me more. I need to know. I'm making money. You know what I mean? I mean, all I know is basic, I mean, you teach them how to, you can teach so much, so they don't end up making their property, their policy and things like that. Like, you know how to structure things for the long term to be able to help them. So you're a strategist too. You see what I'm saying?
Yeah. I mean, definitely. Like, we're not looking for a fly-by-night thing. Like, we're all in the wealth building arena because we know there's a long-term play. You know, it's going to take a while just to build up the cash flow, to build up the equity. And, you know, going back to what you said, you know, I think Warren Buffett said, you know, it's like the more you learn, the more you earn. So it's just like, you know, keep educating yourself. And, you know, I feel like the future is yours, basically. But
Most definitely.
yeah, well, this has been a awesome conversation. Really appreciate you joining on the podcast. Where can, if, you know, people want to strategize with you, or if they want to understand, you know, ask you some questions, where can people find you, either on socials or website? Or
Yeah, I mean, they could go to my website. It's efundercapital.com. And if they're looking at my name on the thing, they can see eFunder Capital, how to spell it. But it's efundercapital.com. I do have resources on there where, you know, they could book a free consultation with me. I also have a link for a true strategy call if they want to really strategize. But I would just simply tell them to go ahead and use a free consultation first. It's only 10 or 15 minutes, but, you know, that'll dictate if we need to really go into a strategy session, and then they can get I'll give them the link for the strategy session. And like I said, if they want to, I got I don't even remember the name. I think it's the flipfundingblueprint.com.
okay,
If they're into flipping properties, they want to know how things work, how to get the financing and things like that. It's just an ebook that I created that they could download for free. Check it out.
I'll get all these references in the show notes when the episode is published, so they'll have all those to contact you. But again, Terence, I appreciate you being on, and best of luck in your endeavors.
Well, thank you, Larry. I appreciate you having me. All right.